G'day, Fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to the latest in our ever increasing range of series here on the Motley Fool's YouTube channel. This one, our favourite investing books. You can never have too many investing books, and you want to hear from the experts, the guys who've read the books and who've picked them for themselves, the ones they would choose as their favourite investing books. It's probably a very good place to start. I'm lucky enough to work with a very smart group of guys and girls at the Motley Fool. I'm very pleased and frankly very lucky to also be able to bring you this series where I get to hear from them why I should read the books of theirs I haven't yet, including this one. I'm joined today by the Motley Fool's Director of Research, Kevin Gandiya. G'day, KG. How are you, mate?
Hey, Scott. Good to be here. Thanks for having me.
Mate, thanks for spending the time. Really appreciate it personally and on behalf of our viewers. Mate, this one is one that doesn't, well, you know what I've loved about this series so far, quick tangent, is all the books that we've talked about, I think only one of them I would have picked for myself. And frankly, I was surprised with most of them. I'm not super surprised with this one when I know the book and I know about it, but it isn't one I would have necessarily put in the top dozen or so that I expected you and the team to bring to us. So, mate, tell me 100 Baggers. Kind of the name itself needs a bit of description, and then maybe tell me why it's such a great book and why it's so valuable for our viewers to get a hold of.
Yeah, Scott, I really, really love this book. This is probably one of my favorite investment books. And I think I've read
Nice.
it 2 or 3 times. And every now and again, I do turn about some pages just to refresh my memory and read again. I think it's one of those timeless books that every investor, whether you're an experienced portfolio manager or you're somebody who's literally just starting now, should
Mm.
absolutely read. Now, the full title of the book is 100 Baggers, Stocks That Return 100 to 1 and How to Find Them. It's a very interesting book. The author there is
Okay.
Chris Mayer. I hope I'm not mispronouncing that, or is it Maya? But I really, really love this book. First of all, it's a very simple book to read, and yet it has such a powerful message, which I think
Mm.
is one of my key favorite styles when it comes to reading. If an author can really just translate a very complex topic into a very simple message, that message really sticks. And I think it just strips out all the noise
Nice.
away from that. And I think
Nice.
when we look at a book like this, one of the things that it really brings to light is this idea of when you are investing, you can really find investments that can return multiples upon multiples of your original
Mm.
investment. That is really what I love to get up in the morning and look out for. So, really love this book and looking
Awesome.
forward to digging deeper into more about it.
Nice. Now, the first thing comes to mind when I hear about the title. So the idea of the bagger is I think it's a Peter Lynchism, is it? Or it might be a Phil Fisher as a Peter Lynch?
It is a Peter Lynch message, and I think it really actually comes
Nice.
from the baseball world, so a
It
very American
does.
concept.
So if you hit the ball in baseball, you get to the first base. That's the first bag. A base bag is what they call it. So a two bagger, of course, you get the second base, third bag, fourth bag, you get a home run. And yet we're used to in the investing, well, we're getting more used to, I suppose. Before Lynch, we didn't know it. But the phrase is effectively when you're getting multiples of your investment. A two bagger is you doubling your money. A 10 bagger is 10 times your money. A 100 bagger is 100 times your money. So there's that. The next thing that stands out to me about the title, mate, and I think you're right to highlight it, is for most people, if you hear about a 100 to 1 idea, well, for me at least, the first thing that comes to mind is the long shot, the never will win horse at the Melbourne Cup. You know, the 100 to 1 chance never actually wins. And so for most people, 100 to 1 is a stay away from, a too risky, a never opportunity, a waste of cash, right? Why would you back the 100 to 1 shot? You're going to back the favourite. You're going to back the second or third line favourite. You're going to jump into one of those horses that are likely to win. The 100 to 1 chance is never going to win. But I think that's a little bit different in the investing market, particularly. I assume that's your assertion, and that's the point of the book. So 100 to 1, for those who are familiar with horse races or other things, is that never can win. In this case, it's almost the reverse. It's those that have actually done that and the value of looking for those companies. So maybe break that down for us, mate. The idea of the 100 bagger in and of itself, but also why it's not the long shot, or at least, you know, while there aren't many of them, why 100 to 1 winner every now and again can really make a difference, even if you don't make that much money on some of the others that might share the same characteristics.
Yeah, absolutely. And I think this is a very key and important point for many investors to actually understand is that this idea of 100 bagger, a company that can turn $1,000 investment into $100,000, is not necessarily as uncommon as one would think about it. This actually
Mm,
happens far more frequently than most investors realize. And the reason is because the stock market really is a game of extreme outliers. What we tend to see is that the winners in the stock
mm,
market tend to be big, big winners. And so one really should not be underestimating what can happen. In fact, we actually have a range of 100 baggers that we've known. A company like Amazon, for example, or
mm.
Netflix. These are companies that most people would know about and have heard about.
I mean, that's a really, I mean, look, Amazon, Netflix, they're astounding businesses, but even those maybe that don't do that, I mean, Afterpay is probably what, a 50 bagger, I suppose, something like that, maybe even a little bit more than that. I mean, it's one of those things, shoot for the moon and land among the stars. Do they have to be 100 baggers to be worthwhile? It sounds like a silly question to say, is a 50 bagger enough? I mean, of course it is, but from the book's perspective, how do we have to be chasing the 100 baggers, or is the concept just the idea of looking for those extreme outliers you mentioned?
Yeah, it's really just the concept that you can actually find investments that can return multiples of your original investment. So
Okay.
if you get a 50 bagger, look, that's not a bad return at all. If you're getting a 20 bagger or a
Yeah.
10 bagger, that's really not a bad return at all. But what I find quite interesting,
Mm,
Scott, is over a 10-year period, even if you're just getting a 6x return, so a six bagger, that's still a
mm.
20% annualized return over that period and actually double
Right.
what the market
Yeah.
actually returns. And the market return itself is a pretty good return over time. So
Mm,
this
mm.
idea that you can actually find winning stocks that can beat the market and actually return these multi-bagger type returns is a very, very powerful concept. And that's exactly what this book is trying to bring to light.
I love it, mate. It's a really, really important one too. Does the book go into how to find the 100 baggers? I mean, obviously, understanding the concept itself is probably more powerful even than the examples, I suppose. Just opening people's eyes to that is probably, I guess, I haven't actually read the book, believe it or not. It's probably worth reading the book alone just to get the sense that it's possible, because most people would say, well, I couldn't possibly do that. Or, the old, you can't go broke taking a profit. Well, you can't, well, maybe, but you can't get a 100 bagger taking a profit either. Does the book talk about how to go about finding some of these 100 baggers?
It absolutely does. And I think that was one of my favorite aspects of this book. It's a very, very practical book. So it's not just talking about a
Okay,
wishy
nice.
washy, high level concept. It's actually giving you practical ideas of how to do it, but still doing it in a very simple and understandable way. So I think the first thing that the book recommends is that you actually need to be in this framework of actually looking for and trying to find these
Yeah, right.
multi-bagger type investments. If you're just making investments without actually looking for them within that context, then the things that you look for in those companies may not actually be the things that lead to 100 bagger type
Right.
investments. Now, the first thing, and I'll give you some pointers. I do want everyone watching this to read the book, support the author, but I'll give you some pointers as to what are some of the things that they point out that are critical to
Mm,
finding 100 baggers. Now, they all sound obvious, but that's exactly the point. Some of these
mm,
concepts are
mm,
really right just in front of you. The first thing is growth. You need a company that can grow and grow and grow and grow over very long periods of time. Companies that
mm,
can grow
mm,
their top line revenue for significant periods of time. Whether and it doesn't necessarily have to be like 100% annualized return. It can be even just a 20% annualized return over 10, 15, 20 years can really
mm, mm,
amount to significant compounding on that top line. And obviously, it needs to be a company with a scalable business model. So companies where the rates of return on investments are high. So really, that just means that if a company is investing $1,000, if it's getting
mm,
back something like $200, that's a 20% return on its investment. If another company
mm.
is investing that same $1,000 but getting $500 in return, that's a 50% return on that investment. So companies that can really
Mm,
just
mm,
invest more and more cash into its business, earn high rates of return on that cash, and then keep reinvesting that cash again. That creates that compounding effect over time. They also
mm,
preferably need to be smaller companies. We do know that it's harder just with the law of large numbers, it's harder for really large companies to continue to grow at those large rates. At some point, they do start to hit that wall and it just becomes harder to do that. There are exceptions, of
mm,
course. Really large global businesses can expand for that very, very large addressable market. So, company obviously like Amazon does come to mind because it's essentially serving a very large global audience. So I think those are some of the key things to be looking out for if you're an investor that's looking for those 100 baggers. The last bit that I quite found particularly interesting is you really need to be a reluctant seller if you're going to get that 100 bagger type returns. The reality is these are not the type of returns that happen over short periods of time. It really takes long periods of time. I think sometimes investors literally just get bored of holding a stock for long periods of time. But the research definitely shows that time is one of the key ingredients to those significant long-term returns. A growing company, a company that can sustain its growth for very long periods of time, combined by that's willing to hold that kind of long period and continue to follow the story, really does lead to those multi-bagger returns.
That's a really, really important lesson, Kevin. I think that's I assume I'm going to go on a limb here and say you like it because that's the style of investing you like to pursue. Is that a reasonable assumption?
Yeah, that's a reasonable assumption, mate.
Nice, I like it. And here's the thing: I love the fact you mentioned supporting the author, mate. Partly because we actually do believe in supporting other people's IP. Secondly, we're not trying to give you the whole book here. There are people out there who've said before, well, books are too long. Just get to the point. Give me the headlines and move on with it. What I think a lot of people miss. This is kind of a bit of human psychology here. Is we love and we work with the power of stories, right? And so, yes, could you distill that book down into a 10, 15-minute YouTube video? Probably. Could you do it in a one-page pamphlet? Probably. Could you intellectually take that information in? Probably. Reading the book and understanding the way that storytellers, particularly good storytellers, and you're saying this is a well-written book, it has a psychological impact far beyond just the kind of absorption of the material, right? And that's so for all of this entire series, past, current, and future episodes. We're not saying, watch this instead of reading the book. We're far from that. We're saying, here's a great investment book. The guys that are talking to me and girls that are talking to me love the book. They want you to read the book as well because they loved it. So this is not a replacement for it's a taster. It's an entree. It's a recommendation. So please go and read the book for the author's sake and frankly for your own sake. We're not, we will not be able to do it anywhere near enough justice here. We're trying to whet your appetite and say, hey, if you believe that Kevin's right, that A, it's a good book, and B, this style of investing can work, hey, there's the book. Go and check it out. Christopher Mayer, 100 Baggers. Kevin, thank you for sharing your expertise. Thank you for sharing the book recommendation. It's going to be on my list now. I've got a fair number of books behind me, but there's always room for more. And it's one that has been around kind of, I get the idea, and you and I have talked a lot about this with the team over time. We're kind of big growth investors here at the Motley Fool. But if you can... if I can improve my knowledge and the applicability of that advice by jumping onto that book, I certainly will. There you go. 100 Baggers by Christopher Mayer and Motley Fool's Director of Research, Kevin Gandiya. Mate, thank you for the time. And Fools, thank you for watching. Until next time, Fool on.